Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1841st edition of Short-Term Trading Live with Oscar Carboni. Good evening, traders. This 1841st edition of these educational videos coming at you on a Wednesday night for trading on Thursday. That is Rocktober 11th, and boy, has it been Rocktober 2018. Traders, when I say Rocktober, oh boy, look what happened since it broke. So please know that trading of futures, stocks, ETFs, you name it, it's extremely risky. Volatility is through the roof. Please do not ever trade without money you cannot afford to lose. Make sure that if you are going to trade, you put stops in first. Never, ever trade without stops. And always, always join me in my live trading room at livewithoscar.com. Good evening, traders. So, Rocktober living up to its name. I've come in front of you almost every night with this chart, and since up here I told you it was starting to break, and at one point I wrote, oh boy, here it comes, and we started to break, and I mentioned that if we got through the 50-ball moving average, we would slice through the Omni and go right down to the 200-ball moving average. Why? Because the leader of this route, this whole thing that broke here, the leader was the Russell 2000. And the Russell broke the 50, broke the Omni, and went right to the 200. So here is where we were yesterday, right here at the top, at the 50. And I said we'd break to the 200-ball moving average. This is today's bar, traders. Oh my goodness, look at that monster. Now, I apologize that this is another one of those desktop shoots and I'm not in front of the video. I like to be in front of the camera so I could better explain what's going on. But markets have moved very quickly, and I need to get this information out to you. So here we are. We dropped right down to the 200-ball moving average. Now, I am here to tell you, traders, we have been absolutely correct with the downside coming. Whether we made money trading these trades or not is another story. But the Omni absolutely called it correctly, and many of my traders have done well off this information. So continue to pay attention. I am here to tell you now, the easy money on the downside has already been made. It is not going to be easy any longer. The easy money has already been made. It is going to get a lot trickier now, and it's likely going to find areas where stock pickers, bottom pickers, are going to come in and look for bargains. Why would I say that? Well, let's take a look. So, I'm telling you that the easy money on the downside has already been made. It's not just get short and watch it drop anymore. It's going to get tricky. And let me show you a few things. So we expected that the S&P would drop from the 50-ball moving average and break down to the 200, and it did. We also thought the Nasdaq would do the very same thing. And here's your Nasdaq. It did the exact same thing. It went right down to the 200-ball moving average. Look at this thing. Smack down right to the 200. Remember I showed you this bear flag? I said it's a little unorthodox, but it's a bear flag below the Omni. We're below the 50. We should crack to the 200. Well, the Nasdaq did, and I'm going to say it again. The easy money has already been made on the downside. Now it's going to get tricky. Now let me show you why we may very well possibly find it prudent to start looking for, as this market dips a little further, a buy area to start getting back in the markets. Let me show you what I mean by that. If we look at this chart, Dow Jones Transportation Average. See this? This is the 50-ball moving average. It's green, not black, but it's the same average. See how the market holds almost every time it gets there? Well, we just got back to that average now. This is the settlement on Wednesday afternoon. Let me add something to this mix now. Look at this. Right here. This thing starts right here. Boom. Look at this trend line and the average. It is non-stop holding all the way through. Since the average and the trend line met the market, it has held every time. And a bounce ensues each time. And here we are right at that spot. Now, we can absolutely break it and head on down to the 200, but this is a big, big, booming bull market that's been going up for a long time. There's no reason to think the top is finally in. So for now, let's consider that we're going to start to see some support down here. That's in your transportation average. Look at the emini S&P. Same thing. Same exact formation. Coming down to, and I'll move the channel so you can see it, coming down to that 50 bar moving average that holds consistently, right? It continues to hold whenever you get near it. We are near it right now. We're not at it, so we've got room to drop, but we're near it. And then watch how this trend just fits perfectly. See, the trend hits this low, the market rallies, hits this low practically, the market rallies, hits this one, the market rallies, hits this one, the market rallies, and here we are. So we have to think it's going to hold. Why? We're in a big booming bull market, and that's what it does when it gets down here. So I don't think we're going to continue too much further. I actually have targets on homework I've done today. Those targets told me that we would start to move lower in the S&P and that we should find some kind of support in your S&P somewhere around 2747-ish. 2747. My work says somewhere around this level, the S&P should start to find some legs. And then I pulled up this chart. Now, my homework had nothing to do with this chart or the weekly bar, by the way. I'm doing homework on the daily and smaller. And I looked, and guess where this comes in? Right around that spot, almost exactly at 47. I went, oh my God, look at that. Even support on the weeklies coming in at that spot. Now, the 47 I literally got from using my normal Omni analysis. In fact, I gave this level out to my Omniacs in my trading room today, all day on Wednesday. And this is where I think we can get to. In fact, I don't know if I gave this level out to them. I told them I worked on a level. I'm not sure if I gave it out. But the level I worked on all day in the trading room was this one. And then when I pulled up my weekly, and I found support at the 50 bar moving average and this trend channel right at this price. But it had nothing to do with the analysis I did. I find that interesting. Let's see what happens if we get down to 2747. Then you move out to your Nasdaq. And what I'm telling you is that every one of these markets has now gotten to a point where the easy money has been made, and we're finding support. Where? At the 50 bar moving average and at major trend line support. So here we are. The three charts I showed you are the three main ones we're dealing with: transportation average, Nasdaq, and the emini S&P. All three of them are in this exact same situation. So I think it may be prudent now to consider bargain hunters coming in. That's what I think we're going to start to see. It doesn't have to happen right at this level, but if we hold here, you'll see them start to step in. So it may be prudent to look for buy levels over sell levels now, kids. I think it will drop further, but it should stop according to this analysis. Now, you know me, I'm not going to hold to it. If we break here and the bar after tomorrow on Thursday looks like this, let's make it red so that it's in tune with everything else. If it looks like this, I'm not going to say it held the 50. I'm not going to say it held the trend line. I'm going to say, oh boy, we're in trouble. But that's not what I'm going to say right now. Why? Because this is a pattern. And technical analysis, the cornerstone to technical analysis is repetitive patterns. For what we know right now, near this trend line and near the 50 bar moving average on the weekly charts is a repetitive pattern of holding. Until we do not hold, you have to think that's what's coming next. Traders, remember, consider bargain hunters stepping in. Remember that the easy money on the downside has already been made. And join me in my live trading room at livewithoscar.com. Remember, RSVP for the Omni Camp Bash. RSVP for the Omniac Bash. It is November 11 and 12. No, I'm sorry, 10 and 11. I'm lying about that. 10 and 11. And all of you are invited, so please come on out to the Omniac Bash. It's in Las Vegas. You are invited to hang out with me for 2 days, all day Saturday and all day Sunday. Simply call the office, email me, get in touch with me, RSVP, and you are there with all the rest of us Omniacs for November 10th and 11th. All right, traders, it's going to be rough tomorrow, but keep this in mind, okay? It doesn't mean it has to hold, but it is a repetitive pattern. Keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll traders, RSVP for the OMNI Bash, and I'll see you all at livewithoscar.com.